Hello, welcome to PSR, People Speaking Rail. I'm Mike Baudendistel here from FreightWaves, host this show and the Stockouts. But this show, we're going to be focused on the chassis leasing and chassis pool industries. And this is really a follow-up to what we wrote up. Actually, which I should say Joanna wrote up, has had an article about a month ago where Joanna interviewed the TRAC Intermodal CEO, Dan Walsh. And we're going to have Dan on the show here in a moment, and went through some Q&A on sort of the outlook of rail intermodal, and it was actually came away pretty positive, I think, on that article as far as upcoming growth. And with that is just a little bit of an intro. Want to save the time here for the interview with Dan. I'll intro our guest, Dan Walsh, CEO of TRAC Intermodal. Do we have Dan?
There you are. Hi, Mike. How are you?
Good, thanks. Good to see you. Thanks for coming on the show.
It's a pleasure. I appreciate you having me and giving TRAC a voice. Thanks a lot.
Mm-hmm. Absolutely, yeah. So why don't we start out for those people that are not familiar with TRAC Intermodal, maybe not even as familiar with the how the chassis leasing pools work. If you give a little bit of overview of your company and the industry.
Yeah, sure. So TRAC Intermodal is the largest provider of marine and specialty chassis in North America. We have in the order of 180,000 units on every rail ramp and every terminal in the country. The way the product is used basically is if you think about the cargo ships coming into the terminals, the boxes come off, they're loaded onto our units, and then they're dispatched to either a warehouse or to a rail ramp and then onto their next destination where the whole thing happens again. The chassis are provided through a pool where multiple providers insert a number of chassis and people draw on them as needed, or through direct lease, primarily to the trucking community, but also to the NVOCCs and the BCOs.
Got it. And that 190,000 units, what's the market share of that, out of curiosity?
We're the largest. We've been in the order of 34 to 40%.
Okay, 35-40%. Okay, and do you do the chassis for the domestic side as well, or is it really just primarily the marine chassis?
It's primarily marine, but we used to, and then we sold our domestic pool in 2018. But in January of 2021, we re-entered the market, and we're pretty happy with how it's progressing. It's certainly an area where we're interested in growing, and we're having a lot of productive conversations with the railways and various other customers. So it's an exciting time for us, but certainly one for the future.
Yeah, it is an exciting time. And, I think most of the people that follow this industry, understand that there was a chassis leasing shortage in about 2 years ago in 2021. It wasn't just chassis leasing. There were all sorts of issues of congestion in the intermodal market, caused intermodal to lose some share to the highway. Can you walk us through a little bit about sort of what happened during that period of time? And is there any reason to think that couldn't, potentially happen again?
Yeah, so look, I think that it's more, it wasn't so much a case of a chassis shortage, and this isn't semantics. Things just got caught up at points in the supply chain and didn't move. So for example, a key metric is turn times, which is basically the amount of time a chassis is on the street. So if it goes out from a gate, how long till we get it back? And in 21 and 22, it was running at 9 to 10 days. Currently, it's at 6, which is normal. So, and in some cases, it doubled. And what was happening was, in a lot of cases, for example, other issues in the supply chain were impacting on the availability of chassis. So, for example, if you think about the retailers, they were having difficulty staffing their second shifts, and they were also having difficulties dealing with packed warehouses. So the solution was to leave the box on a chassis outside in the car park. And that tied assets and prevented them from getting back in place. We also obviously had operational challenges on the ports. There were a lot of containers that needed to be taken off the ports and moved back, and it was difficult to get space on the vessels because there was so much business for the port-to-port operation. So the point I'm trying to make is that it was a combination of factors which led
Mhm.
to tightness on availability of chassis. The other factor, of course, was it became difficult to source them because of the the implementation of tariffs and countervailing duties on China, which had manufactured 90% of North America's chassis, new chassis up until that point. So there was a lag where the domestic manufacturers had to catch up. So the market was capacity constrained as well. So we had operational challenges and capacity constraints, and obviously massive surges in demand. If you think about the second part of your question, whether it could happen again, Mike, that really, as everyone knows, we had COVID where you had nothing, and then you had a massive surge of cargo for 2 years. So could it happen again? Yeah. Will it happen on the same scale? I don't think so. But it could. Right? So, what's the lesson that we learned? And that is that we have to continue to invest. And so we continue to add new chassis to our fleet. We continue to upgrade and refurbish our existing fleet. And we're positioning for an increase in volume, which will definitely come. We all know that our industry is cyclical. But we have to continue to invest even in the soft markets to make sure we're ready for that.
Yeah, that was a great overview. So it's really, there were enough chassis. They just weren't being utilized productively because they were stuck in various points of the supply chain. So very interesting there. I wanted to ask you, what are you seeing right now in the market? We've seen it's sort of in our data, actually somewhat of a volume surge. I have a couple of sonar charts I can run by you if we can bring those on the screen. So this is international intermodal volume. So this is going to include the 40-foot, 20-foot. And you see the white line is 2023. You see it's actually picked up, at least in our data, from the past couple of years, of course, below where it was in 2020. And then on the domestic side, which is the next chart we have, seen some kind of an October surge, there too. Are you seeing something similar in the market from your perspective?
Yeah, we're seeing, I'd call it a bump rather than a surge, Mike, but we're definitely seeing some increase in activity. I think what shocked everyone today were the GDP numbers that came out. They're just incredible, 4.9% growth in the last 3 months, more than double the previous quarter of 2.1. Despite mortgage rates being at, north of 7% and the Fed lifting them 11 times since the previous summer of 21. So, and inflation, at 3.7 where it was 9%. So, the economy is much more resilient than I think many of us thought, myself included, to be honest. And, that's a pretty staggering GDP number, in my opinion. And and obviously that's been reflected, as you point out, in increased demand, increased activity, because the American consumer is still pulling goods towards them as well as services, and we're having to manage that volume. I think some of the metrics certainly point to an increase in volume, but more so in the second half of 2024. And I think you've got an 8.8% increase forecast from the National Retail Federation, in the first half of 24 compared to 23. I think that could well happen, but the first half of 23 was pretty tough. I think that we're more likely to see sustained growth in the second half of 2024. The only thing that worries me in that context is the perceived disconnect between supply and demand on the steamship line side, where there's just so much extra capacity being added that currently far exceeds demand at a time when older vessels are not being scrapped. There might be onward rate pressure. But I do believe in the American consumer. I believe in the American economy. And I think historically, if you look at GDP growth, chassis and container growth is very tightly correlated to that. So if the US GDP continues to grow, so will the demand for our product and our services.
Yeah, that comment that the excess capacity on the ocean lines. Certainly we're seeing that as well. How does that flow through to your business?
Well, so it means if you think about bigger vessels, less vessels, more cargo in a congested, area. I think that there's some operational nuance to actually handling those bigger vessels. But obviously, the main impact is rate pressure. And that's not just on our business, that's on everyone in the supply chain. If there's not as much money available in moving a container as there was before, then everyone's looking for a saving at all points in the supply chain. And so it just gets passed along. So it puts pressure on outfits to operate very efficiently and to make sure that they're not burdening their businesses with unnecessary overhead or expense, and that they're able to service the customers, even despite those challenges. So I'd say a combination of cost and operational challenges.
Gotcha. That makes a lot of sense. I wanted to ask you also about just potential changes in the North American supply chain as far as where goods are imported. It seems like there was this shift towards the East Coast ports for a period of time, and then kind of COVID hit and needed things more quickly, and then just kind of a shift back to the West Coast ports, and then the West Coast ports got congested, and then it was the shippers were kind of saying, well, maybe we should diversify and have them in lots of different ports. And I would imagine that for your business, you would have to relocate chassis to different pools potentially if some are growing faster than others. But what are your thoughts on all that?
Yeah, you're absolutely right. I mean, we're in every location nationally, but there is a bit of, we call it positioning and handling. So there's work to be done in terms of managing the fleet to make sure that you have the units in the right place to meet the volume. And there's an art to that, obviously. I think the people at TRAC, fortunately, are brilliant at it. They're far better at it than I am, for example, and they do it for a living and have done it very well for 50 plus years. So where the cargo arrives is not necessarily that big an issue for us. I do think the dynamic that we're seeing right now is that some of the volume that moved away from the West Coast is moving back. And I saw that LA, for example, was up 14% in September 23 versus September 22. And that's the second month in a row that it's had, very material growth against the same month in the previous year. Still down 18.6%, for the first 9 months of the year compared to 2022. But it suggests that some of the cargo that moved away is moving back now that there's more certainty around the labour contract and some of the congestion issues have gone away. I would also add, though, that historically, when volumes moved away from the West Coast, not all of it has gone back. And if you look at the growth of some of the ports in the South Atlantic, for example, and also the Gulf, Houston is growing materially. I don't think all of the volume that went there is going to go back to the West Coast necessarily, because as you point out, the shippers made the tough decision. They've made the change, and they don't necessarily want to send it all back to the West Coast. The final comment on that is the shift of manufacturing capacity away from China into the Southeast Asian countries, notably India, potentially opens up a route through the Suez Canal to the east coast of the United States. So there could be a shift in how product is distributed in North America when you consider all of those factors. But there will still be, in our opinion, a lot of product arriving that's going to need to be distributed, and that's the more important thing for us, that there's product to move. And when you're national, you're going to be involved in moving it.
Yeah, you'll move it wherever it is. They'll supply the chassis. Wanted to ask you also about e-commerce, and this is a question I get sometimes: is like, well, does all the e-commerce growth actually hurt intermodal? And my sort of response is, well, in order to have it in 2 hours, like Amazon promises, it kind of needs to be pretty close to your house already. And UPS is the biggest, company moving on intermodal anyway. But what are your thoughts on e-commerce and how that ultimately translates to intermodal growth?
Yeah, look, I think that COVID accelerated the development of e-commerce, or the customer. In my opinion, let me be more succinct. In my opinion, consumer behaviour changed on the back of COVID and accelerated the development of e-commerce by a decade at least. And that shows up in the numbers. You can see that it continues to grow year on year. It continues to grow as a percentage of retail sales. But to your point about the consumer expectation, it really means that customers want it faster. They want to be able to order it online. They want it faster. And if they don't like it, they want to be able to return it for free. And for us as participants in the supply chain, that puts a lot of unique operating challenges on us and on our customers. So our customers, implemented express services from Southeast Asia to the US to get these products there quickly, and they have to have units available. They can't then be delayed because there's no chassis. So that led to them changing their models, some of them wanting private pools, wanting term lease arrangements, which we obviously are able to service. We say yes to our customers. And again, the requirement that you've got a national footprint so that you can deal with the additional locations which are emerging for that final mile delivery, as you talked about, where you've got more nodes in the supply chain than you had before because of the need to deliver from the final mile to the customer's home as opposed to a retail outlet. So, look, e-commerce is here to stay. It's only going to get bigger. That's how people like to consume these days. The retailers are going to insist on having the best possible electronic portal to manage the customer interface, and they're going to press all of us in the intermodal supply chain to be faster, more efficient, and more responsive to support the customers. And that's not going away. That is only going to accelerate, in my opinion.
Yeah, it does seem like the railroads are taking the service aspect of this more seriously. It seems like most of the rail CEOs have elevated that in terms of importance, having maybe more resources than the bare minimum, for when there's volatility and demand and all of those things. So I agree with you on all those things. I want to ask you, you have on your website some interesting video on the refurbishment of the chassis in the field. And can you talk to me a little bit about sort of what that does to extend the life of the chassis and upgrade the equipment?
Yeah, it's been revolutionary for us, and I don't use that word lightly. We really didn't have an upgrade program or a refurbishment program before 2019. We had one, but not at the scale that was needed. And basically, when we think about the life cycle of a chassis, we just think about the quality of the frame, because everything else can be replaced. Every other part can be put back on that same frame, and the asset can be put back into use. And very simply, it's just about removing all the components, dealing with any pitting, and blasting the frame, then getting it painted, getting the unit reassembled, and then getting it back into circulation. And that's fantastic for us because obviously it has a positive impact on the investment of capital that's needed to support the business ongoing, but also provides a better, higher quality, safer unit to have out on the roads. And if you think about the amount of investment that all the IEPs have made into the chassis pools since the steamship lines divested them in around 2010, 2013, it's billions of dollars, and it was needed because the units were run down. That investment's been ongoing, and so it's not just a case of adding new units to improve the quality, but the existing fleet, the base fleet, has been elevated to a higher standard. And that's why a lot of the safety issues, frankly, that occurred in the early 2000s do not occur at the same frequency. The quality of the units is far better.
Mm-hmm. Yeah, that's good. And so it seems like, quality units is better. You can refurbish them. Maybe you don't need to have as many manufactured, which maybe at least partially alleviates that risk you were talking about earlier with the manufacturing capacity. But could you, describe that a little bit? So is the manufacturing industry fully responded to the tariff situation, the domestic OEMs, available to build those chassis? And just out of curiosity, what's a typical lead time if you were to place an order, and how long do you get it?
Yeah, so it was really a tale of two cities. I can tell you, during 21 and 22, it was rough. It was just very hard to get product in the time frame that you needed it to service the demand, and so we had to clean up a lot of that. So we still had a bunch of orders coming through in 23, and they were all filled by the middle of the year. And now it's pretty easy to get a chassis because there's softness in terms of demand, and people are making use of the assets they have rather than purchasing units that they don't need at the current time. and the lead time now is in the order of a couple of months, perhaps even shorter in some cases. And there's ample production capacity available. Now, when the market is back to steady state, I still consider it to be depressed from a volume perspective. When the market's back to a steady state, there will be a need for ongoing investment in the domestic manufacturing market to meet those needs. But there have been some fairly sizable players that have entered the market. Greenbrier is a good example. Randon is another one, a Brazilian manufacturer that's making product for North America now, as well as the US domestic manufacturers. So if you believe in the free market like I do, where there's a need, it'll get filled. And that's what seems to be happening. It was a little bumpy at the start, but we're making material progress, and I feel good about where we are now.
Yeah, it does seem Greenbrier is a natural one to build those. They build all the different rail car types. They've built most of the intermodal well cars that are in the field. So that makes a lot of sense. Wanted to ask you. I mean, there's been a lot of news we've posted on FreightWaves about collaboration between the railroads to extend the reach of intermodal. I think some of it was maybe the competitive response to CP acquiring Kansas City Southern. But which ones of those, if any, stood out that seemed to make a big difference going forward in your view?
I think the Kansas City Southern one that you talked about is interesting. I mean, there's going to be a lot of automotive activity coming out of Mexico, I think. And the fact that runs all the way from Canada to Mexico is a big change, I think, in terms of intermodal capacity. I think the point that you made earlier about the rails being more serious about service, I think that's true. I don't think they weren't serious about it before, but I think that they understand that is a way to differentiate themselves, and it's also a specific requirement of the customer, and have made a lot of investment to improve that as well. And I think that was necessary just because of the evolution of consumer demand. So for mine, the big one I think is that you've now got a line that runs from Canada to Mexico and all the way through America. Mm-hmm. And I think as Mexico emerges as a more important trading partner for North America, which it seems to be on the back of the decoupling that's taking place from China in particular, then that corridor I think is going to be increasingly utilised. I think that's going to be a big area of growth.
Yeah, it seems to help the rail proposition overall to not have as many interchanges with different rails. So I think it's exciting. Have you heard anything interesting recently on the drayage industry? I know for a period of time there was, drayage capacity shortage if you go back a couple of years, but any sort of recent trends on drayage that you've heard?
Well, I think the big thing is when you had COVID, loads of people entered the industry, and now they're exiting. And it doesn't seem to be capacity constrained. I'm sure, Mike, you can recall, we all can, when there just wasn't enough drivers and people would pay anything to get someone to drive a truck. And then people started surging into the market, not all of them legitimate, frankly, and then the market, corrected, and it was a very hard reset, and it became difficult for a lot of people who had made investments and entered that market, sadly, to continue their operations. So, I think, my sense is that it's nearing the bottom of the downward trend for the freight market. There could still be a little bit more to go, but I will say that I think it's very difficult and challenging times for a number of the drayage providers out there, and they're good people. They're our customers and our friends, and it's a very, very challenging market at the moment for drayage, in my opinion.
Yeah, certainly wish those guys the best. Hardworking guys do that every day, and congestion and dealing with all the issues going in and out of the terminals and those things. You got about a minute left. I want to ask you, do you have any thoughts on refrigerated intermodal? Do you think it's going to have a big impact on the industry, going forward, or do you think it's just too many moving parts, too much of a time constraints, and too much risk of cargo loss?
It's got to become more reliable for it to really take off, because of it's a it's because of the nature of the product that's utilised in it. It's just got to be. You've got to have sort of cold chain custody. You've got to have tightness in your delivery windows, and some of the variations that we've all learned to live with in intermodal just won't work. So I think that we're going to have to improve reliability for it to really take off. But it's worth doing because the demand's there. If you look at the growth of food service and the growth of, like, for example, cold storage locations in North America, it's off the charts, and the demand isn't going away. So so we need to get it right, because potentially that's a thick growth vein for all of us in intermodal.
Yeah, hopefully the industry can make that happen. So Dan, really appreciate your thoughts. Thanks so much again for joining me on People Speaking Rail and helping people reach out to you and TRAC Intermodal.
Again, Mike, thanks for the time. Really appreciated the chat, and appreciate everything that FreightWaves does for our industry. You guys do a great job, and we appreciate it. We don't take it for granted. Thank you.
Okay, thank you.